Welcome to another session of Pip Talk. Today is the 12th of December 2019. I am your host, Cavell, and today we are going to have a look at pairs I previously gave out on our Sunday setup outlook. Now, if you're watching this video on YouTube, be sure to subscribe and hit the bell for notifications so you can keep informed and up to date with our latest setups. More importantly, head over to litcapital.co.uk, register for free so that you can get access to our education academy for a complete beginner's guide in Forex. Now, if you have a basic understanding and would like to take your trading to the next level, then be sure to head over to our courses. We have a mentoring program that will really take you guys to the next level and allow you to become a self-sufficient trader. Now, heading straight into it, I mentioned on Sunday that the dollar was taking a battering, and all we've seen for the past 4 days is exactly what I've said. With that being said, what we can see is that the equal lows, which I labeled on Sunday, the equal lows has now been taken out. And actually, Donald Trump has come out and said today that a big deal could be on the cards for China and USA. So if that is the case, then of course we can expect to see the dollar regain a lot of strength and spike up. But until then, we still remain bearish throughout the week. Of course, Friday being the last trading day tomorrow, we can expect to see a potential pullback. But nonetheless, we still have a lot of bearish action from the dollar. Moving on to oil, I mentioned that my $60.32 a barrel was my entry for a sell. I still remain with the same intentions. As we can see, my blue zone is in balance. My yellow zone is the institutional candle, and I'm playing 50% off of that candle. Now, it's very important that you identify an institutional candle. And it's very important that it is an institutional candle and not just a bearish or a bullish candle. And the reason being is because if you are playing off of the wrong candle, then the trade can go the complete opposite way as to which you'd want it to go. So it's important to make sure you are looking at the right thing. We've seen a lot of bullish action this week from oil. So we're waiting for oil to climb up a bit higher. Okay, before we look at shorting this pair. This probably won't happen until next week, but the art of being patient always pays. A lot of our students have been able to catch the buy from the 4th of December, which means they've been able to capitalize over 400 plus pips moving upwards. But we are waiting patiently for the sell. And for that, I'm waiting for price to come up and play off of this candle, which you can see here over on the yellow. In the yellow zone. Moving on, we look at gold. Gold is a real textbook move today. We've seen gold play out of the mitigation zone. It's mitigated out here and moved down. I gave this trade out to our trading locker room a couple of days ago for the buy. Okay, the buy was round about here, 1460. They've been able to capitalize and cash out around 1486. As we can see, the price moved up to 1487. Now, pay close attention to what we can see and what a lot of our students have also been able to monitor with the sessions, London and New York sessions. Now, without going into too much detail, the London and New York sessions are always important because they're always areas that we are able to ascertain where the market potentially will come back to. And what we've seen today is price had a continuous bullish action until a specific time frame, or until price was mitigated, which we can see here on a 4-hour time frame. 50% of this mitigation zone price came up to and then turned around and came right back down to take out the New York Open and the London Open. So we are now patiently waiting for the next day. If you are a student of ours at the moment, then you, just like me, will only be trading in the London and New York sessions. So we will now be hunting throughout the Asian session to see what the market unfolds, but more importantly, attacking come the next London Open. Looking at Euro NZD, this has also been a very nice pair. I know some of our students have been holding this now for over 8 weeks. We had a really nice entry quite a while ago now, if I could find it. Here it is. This entry we was able to capitalize at the top, And it's really been a nice trade that we've been able to hold now for a number of weeks, since the 16th of October. So that's almost a month we've been able to hold this trade. Excuse me, that's almost 2 months we've been able to hold this trade. But more importantly, if we look now, price is in this discounted zone. It's beneath, well, right now, if I was to get the fib out, we'd see prices in a discounted zone for a buy. But what we can't ignore is the bearish action that we are seeing from this pair. The euro have announced their interest rate and it has remained the same, but this can also create a negative impact. When interest rates remain the same, it's more negative than it is positive. So for that reason, we cannot go against the economic data, and we have to really follow the trend on this one. So we are remaining bearish. Euro US dollar, again, the same thing. We'd seen price come up. I believe Adam gave you guys an update on this pair. And we are now price. The market had come down 50 pips. It has, of course, pulled back. But if we look at things on a smaller time frame, excuse me, all we can see is the potential pullback to some structure to potentially add another position to ride this pair down to take out the London and the New York sessions. Euro AUD, again, I mentioned this pair to you guys on Sunday, and we haven't quite got what we're looking for yet, which is price to really come down to 1.60242 before we look at riding this pair back up. Again, with the euro interest rate coming out and it remaining the same, this has created a negative effect. So we really just want to sit back, be patient, and wait. And really, guys, being patient pays. So if we sit back and wait to see the market unfold and provide us with what we're looking for, then we can actually capitalize and execute. But until then, I will be waiting and keeping you guys informed and updated as and when I can. AUD US dollar. Again, this was another pair that I mentioned that price had already come to the kill zone area, as we can see over here. And because price had already come to this area, I did say on the Sunday setup call that price may no longer come back, and it may only come back 50%. Now, if we take out the fib and we mark this out, we can see price came back 50%. You could call it 55%. So really, guys, you really have to be able to execute once you see price within the kill zone, because as we can see now here, evidently price did not come back. It still came back 50%, which is okay. But it didn't come back to that 60% plus, which really would have enabled us to catch another trade if we was not executing on the 50% mark. AUDCAD, another pair that I mentioned, it played off of the kill zone area. All of these wicks was in the kill zone. All of these wicks here was in the kill zone. As we can see, price didn't come back. But if we look at what's really happened here on a smaller time frame, this here is a kill zone as well, right here. If we take the fib out, what we can see, price has come back beyond 62%, which is within our kill zone area, which would have enabled us to now withhold a trade, which has given you guys over 100 pips. All of the Aussie pairs has given us 100 pips, which means you'll now be in a trade risk-free, and more importantly, you'll be awaiting the next setup. AUD/NZD, a pair that I'd given you guys an update on yesterday and also this morning. We've really now seen price turn around from this area. We had a nice institutional candle we was playing off over here. And with that being said, what we have now seen is price turn around and really push up now. So what I would say for those of you who are more short-term traders, maybe cash out once you see 100 pips. Again, if you're a short-term trader, 265 pips around this area could be another area where you guys could cash out. But for those long-term traders, I would strongly advise holding this pair for 300 plus pips. That will be it for this week. I've been your host, Cavell. Be sure, guys, to hit the button for notifications as we provide frequent setups, but also access our Telegram by going over to our trading mentor page on litcapital.co.uk. Access our free channel, but if you would like access to our trading locker room, be sure to head over to our courses and purchase a monthly or annually access. And make sure, guys, you secure the bag, stay patient at all times, because every day is money day.